I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today we're talking about second mortgages. Everything, these questions that you might have, we're going to address right now. And remember, this is for informational purposes only. This is not financial advice. Be sure to subscribe, comment, and like.
That's right, folks. We are not your financial advisors, but we hope to be your mortgage brokers. So here we go.
Okay, so second mortgages. You're wondering maybe if a second mortgage is the right thing to do. What is it? How much can you take out?
Yeah. Typically, anytime that you're in the mood for a second mortgage, it's because you're getting something more. You're going to get more money out of your home. You're getting an additional loan to buy that home because the first loan that you typically, get isn't enough to buy or isn't enough to help you with what you're doing with home improvements, et cetera. So second mortgages actually are one of my favorite topics because it's more for you.
Yeah, that's right. So it's simple. You're going to be looking at typical second mortgages are a home equity line of credit. That's that HELOC. That's what it stands for, home equity line of credit. This is a variable interest rate, meaning it's the loan that's given to you. The interest rate is moving around, all right?
Yep, there are some HELOCs that have the fixed product, or, they have the fixed rate, but most of them that we see are going to be variable. At the time that you secure that, that's when you would weigh your options. The fixed is always higher interest rate than the variable. So people typically go with that variable rate.
And it gives you the ability you can draw on that mortgage. You can actually have a balance, pay it down, keep it open.
It's like a credit card.
Yeah, it's just a credit card on the house. And the second another option is the fixed rate. Let's just say you don't want a variable interest rate at all. You just want you have your first mortgage that's fixed, and now you want a second mortgage that's fixed.
Mm-hmm.
That is also an option.
Yeah, and the second mortgage literally is going to feel just like the first. I mean, you got the first mortgage, then you got your second. They even sound close. I mean, they are close. They're almost identical. That HELOC does take the place of a second, but it is a much different loan. So again, the second mortgage is identical to your first in terms of how it feels and how you pay. The HELOC is a different animal. It's a line that moves. You take money out, you put money in, you take money out, you put money back in. Totally different.
That's right. And, they are called second mortgages because they are in second lien position. This is assuming you have a first mortgage.
That's right, yeah.
If you have a free and clear home and you don't have a mortgage and you want a home equity line, well, technically it's just a line of credit in first position.
In first position. And when we say liens, that just means when someone gives you money, you allow that lien to be put on your property so that it guarantees you're going to pay it back. So when we say second lien position, we basically just mean second loan that has rights to your home if you don't pay.
Yes. All right. So a lot of questions about how much can you take out? And honestly, this answer depends on your credit score, what the value of the home is, how much you want to take out.
Mm-hmm.
There's minimums and maximums a lot of times. And banks will often change their requirements. Sometimes they'll say that they will go up to 90% loan to value. Sometimes they'll say 80%.
Yeah.
Sometimes 95 or 100 even at some points.
Right. And they'll also say, sorry, closed. We're not actually giving any loans in that second position. It's market specific. And we're not in one today, but there are some banks that just stopped doing them.
Yeah.
But so it can be anywhere from 0 to 90% because sometimes banks just don't do them.
Yeah. So, there is a handful of banks that will go up to 90%. So we're just going to show you what a 90% amount would look like.
That's
right.
And
that is the combined loan to value. They'll let you take up to 90% of the home's value out. And what that is, they want you to keep 10% equity in the home. And the way they determine that is they take the balance of your first mortgage and they add it to the balance of what we would look at for a second mortgage. And they will basically say, okay, that total loan amount cannot exceed 90% of the home's value.
Yep.
So let's look at an example. Assume that your home value is $500,000 the value, and assume that your current mortgage, your first mortgage, is a 30-year fix at $300,000. So we want to look at how much the bank will let you take out on this second mortgage. Step one, you take the 90%. You basically do the math there. 90% of 500,000 is 450. Step two, you take that $450,000 and you subtract your current mortgage on the current first mortgage of 300,000. So it's 450,000 minus the 300 equals 150,000. You can get a second mortgage max up to $150,000. That is what it would look like if you went up to 90% loan to value, combined loan to value.
Right. And if that combined loan to value changes, whether it be 95 or 85, you just simply follow those same steps. You take your home value times the percentage of what they're allowing for that combined value, and then you're minusing out what your current loan amount is, and whatever's left is what you would potentially have access to.
And this podcast, we're not going to be talking about interest rates or whether or not even a second mortgage is good for you. This is something that you need to talk to a loan officer, talk to us. Our team handles these questions all the time. This is what we do.
This is what we do. We actually have a podcast on when you do a HELOC versus when you don't do a HELOC. So it's complicated like most things in life. The more you dig in, the more you realize, wow, there's a lot to it.
So we hope you've liked this. And if you'd like what we're doing here, be sure to subscribe to our channel, comment, and like.
All right. Thanks, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.